All right, guys, back to work Wednesday evening already. We're getting ready for Thursday's trading session. Got a lot to cover here tonight. Got a bunch of news tomorrow morning on our radar and some great trades setting up for Thursday's trading session. You know me, I'm going to cover all my favorite trades in tonight's video. That way you have a game plan to make some money tomorrow. As always, before we jump in and get this party going here tonight, make sure you subscribe so you don't miss tomorrow night's video upload. And if you guys enjoy the video, if you tune in every evening, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro. Let's get this party going. Thursday is not going to trade itself. Boy, I'll tell you, looking at the markets for tomorrow, everything's pretty bearish right now. S&P, of course, got a big run down. Nasdaq's trying to push lower. Oil trying to push lower. Now, I definitely have some short setups on my radar for tomorrow, but I'll tell you, there are ranges above us and support below us. I'll tell you again, we got a bunch of great short setups for tomorrow, but we have some great reversal opportunities here. Maybe some short squeezes setting up for Thursday's trading session. Again, I'm going to cover all my favorite trades, the squeezes, the reversals, the breakouts, the failures. We're going to cover all my favorite setups here tonight. That way you know what to look for tomorrow on Thursday. Speaking of Thursday, though, before we jump into our charts tonight, though, I just want to make sure we're all on the same page for tomorrow. We have 3, maybe 4 things to keep in mind for tomorrow. First of all, OPEC meeting. Now, the OPEC meeting will usually come to an end about noon in London, so it's usually right as we start opening up our trade room, usually 7:30, 7:45, 8 o'clock Eastern time. We usually begin to hear what the OPEC meeting, what the results of that meeting are, unless, of course, any leaks come out ahead of time. Now, we talked about last night how crude oil is very news-driven right now, headline-driven right now. That is a major aspect for the oil traders out there tomorrow. We'll talk more about that as we go deeper into tonight's video and look at the oil chart. But be aware, that is a major variable going into tomorrow for oil traders. Again, 7:30, 7:45, 8 o'clock Eastern time is usually when we start hearing stuff come out of that OPEC report. Keep that in your radar for tomorrow. Then we go all the way down to the factory orders at 10 o'clock Eastern time. Don't worry about the employment number, the jobless claim. Don't worry about the rest of that stuff. The factory orders number is the next item on our list that has potential to really move these markets. We heard from the ISM manufacturing number today, which looked really good for, considering inflation, supply chain. We'll see if that number holds the line or if it surprises us tomorrow as well. That 10 o'clock top of the hour is what set things off today. You better beat your desk tomorrow if you can at 10 o'clock Eastern time. And then don't forget too the weekly oil report. It's usually on a Wednesday. Monday was a holiday. It gets pushed back to Thursday at 11. Be aware of that change in the schedule. Anytime Monday's a holiday, that weekly oil report, which is usually on Wednesday mornings, gets pushed back to Thursday at 11 o'clock. Keep your eyes on that time. Again, if you're trading oil, that'll be a nice 1-2 punch coming after that OPEC announcement earlier on in the session. And then don't forget too, also one more thing too, tomorrow afternoon is the afternoon session before what is arguably the biggest news of the week, maybe the month of June, that employment number tomorrow morning, not tomorrow, Friday morning at 8:30. Why does that matter for us tomorrow? Because towards the end of the day on that Thursday before, all the big players, all the big market makers, they can't be floating big positions into the end of the day tomorrow because they may not be able to get out of those positions ahead of that employment number on Friday. So as I always say, trading is like riding a bicycle. It's always easier when it's moving. So keep an eye on the personality of the market tomorrow afternoon. If it starts getting light, starts getting thin, starts getting jumpy, that's your sign now to back off and save your bullets for that Friday payroll number. That's where the magic will be coming out, right, that following day. And if you don't know what a good personality looks like, if you don't know what a healthy market looks like, that is a really good sign to come out and join me tomorrow morning in the trade room, 8 o'clock Eastern time we open up, and I'll show you exactly what good price action versus bad price action looks like. So now you know what's on our radar. Quite a bit of items tomorrow. on the news. Remember the OPEC report early in the session. Remember that factory orders number at 10 o'clock Eastern time. All right, let's go right through each one of these charts here tonight. Whether you trade one of these markets or all of these markets, I'm going to cover all my favorite trades on each market tonight. You'll learn something new throughout the entire video lesson. And you know me, I try to wrap it all together and save the best stuff towards the end of this video. So I'll give you a reason to stick around all the way to the end. Any questions? Drop those questions for me in the comment section. Let's get this party going here over on the E-mini S&P. What is the most important factor right now on the E-mini? Well, there are three basic components, three important factors here on the E-mini. The first one is, and we should know why this is important if you watched last night's video, it's a very strong move down, right, to basically take out those lows from yesterday. Remember, anytime we see a strong move in one direction, we know the odds are pretty good, or at least we know the sellers are going to try to retest that low. Once they get the retest of that low, then we start looking for reversals, which I love, by the way, for tomorrow, and we look for breakouts going lower. Where's that breakout going lower from there? The breakout puts us down around that next big range, 4,010, 4,020. That's kind of the next big milestone as we go. So we know that's one important factor. The second very important factor, which really I think might be one of the keys for tomorrow, is this pop up into a trading range. Now, why is that important? Well, because anytime we pop up into a trading range, ranges act like magnets. And so as the market rolls below that trading range, we now have potential to catch those bears who are trying to force this thing going lower and snap this sucker right back higher. These are one of my favorite types of market conditions because not only can you trap in the bears, but you can trade the slingshot reversal. And remember, that's last week's close up there. Remember, anytime we go into Thursday or Friday, the previous week's closing price becomes a juicy, juicy psychological target for us. And that's definitely something that we have on our radar for tomorrow. The third piece of this is not as easy to see on the S&P. The Nasdaq is very, very obvious. But you might notice here that with that entire big move down that we saw earlier today, we really kind of popped back up, and we're really, for the most part, sitting right around that low from yesterday. Now, if you watched last night's video, we talked about how that big bear moved down, wanted to retest, and they clearly got through that low, right? It's pretty obvious, but it is kind of interesting. It might be a coincidence, of course, that they kind of saved it right there, right? It would go a long way for these bears to be a little bit lower, but they weren't able to really finish it down around these lows here. I think that really adds a lot of potential here if that low from yesterday holds here for that snapback going higher. Those are the three main components that we have. Now let's put it all together. How do we use this information now to make some money on this here for tomorrow? Well, first of all, as we go lower, right? As we go lower here, bears would love to look for shorts on the way down to that low, right? The bears want to get this price back down to retest the low. What's the problem though? The problem is if you sell down here, you're selling relatively low, right? We don't want to chase it as it goes lower because that range above us is a magnet. There isn't a very good risk reward ratio selling down here. So as the market goes lower, this is where we look for those first test traps for the bears. You'll notice I found that channel drawing off that low, off of that high. One of my favorite short trades, or trades overall, whenever we have a range breakout, is that first test trap, we call it, right? It's the first touch of the top of that channel, and it's a trap set up right above a prior swing because, of course, we want to sell as high as we can. That's a great short setup as we go lower. Now, as we continue going lower here, this is where the fun starts. Now we start to think about that two-try failure or that double bottom reversal. Remember, right now the bears have this. They want to retest that low. Once they get that retest of that low, if we start seeing some of the weak hands trying once, trying twice, you can see an example right there, right? They take out that low, they try once, they try twice. That's the same type of two-try reversal setup I would love to get off of that low tomorrow. Remember, let them try twice here because it's an overall bear market. It doesn't matter that we're at a level of support. We have to make sure we trap in those bears. That way we can use their stops as fuel, right? That's the key to that reversal. Remember, we're at major support. We have a range above us as a magnet. Again, we're possibly sitting right at that low. You know what I'm saying? So that's a really good spot there. Again, I can't predict that reversal, but I can definitely look for that 2-try failure. And then once we see that nice juicy signal candle, we can jump in right into that move going long here for that 2-try failure. Now remember, this is the best part because now the move is just getting started now. Now what I can do is I can go out and find a new channel. Always my favorite trades here. Find that new channel by drawing off the high, find it off of that low, and then look left. Try to get underneath some of those prior swings. This will get us underneath the moving average. We can take any one of the price action entries we talk about in our free trading course off of that low. Traps are great. Failures are great. Pullback combinations will work there as well, right? So again, we got pretty much whatever setup we get off of that low. 2-try failure. And then again, we're grabbing that trap, that failure, that pullback combination off of that low. Now listen guys, I know most of you all have taken the free trading course on the website. You've learned the setups, you know the rules of when to take them and when to skip them. I get so many great comments every week about how well you guys do off the free course. So I want to make sure everybody learns those setups. If you're one of the few people tonight watching this video, maybe for the first time, if you haven't grabbed that free course yet, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link and get registered for the free trading course. Learn this roadmap. If you're like me and you hate missing the best trades each day, or you're tired of taking so many losses, that free trading course link is popped up there. That'll give you the entire roadmap we use every day in our trade room. You'll learn how to find the right setups, know which ones to skip. It'll get you right back on track and start getting the results you want out of your own trading. That way, the next time we take out that low and I say 1, 2 failure into, what do we always say? First test is the best test. You'll know exactly how we trigger the failure and of course that first pullback as we go higher. Now, what if we get a breakout going lower? What's a breakout going lower going to look like? Well, as you can see, there's a lot of open space down here below us. There's this little tiny low there at 40.41 and a quarter, right? It's a little straw. You know, it's basically a wet paper napkin here if these bears can really get this thing going here right now. Let's think about some breakout patterns as we go lower. One of them obviously will be a 1, 2, 3 breakout. If we take out that low and then hold that pullback and jump off that moving average. Now remember, it does not matter how strong that move down is. Okay, I don't care how strong that move is into that low. I have to wait for them to hold that breakout. See, they couldn't do it here. If they can't do it there, right? If they can't do it, it's going to go right back in that range again. Remember, range is above us, acting as a magnet. So we take out that low, we hold the pullback, and we jump off of that moving average. Now, what do? Once we see that jump, now we know we can find that entry off the high of the new channel. I'm going to mark off that low. I'm going to mark off that channel high, right? That channel high. Again, I always like to look left, find some prior swings, get up above that prior swing. That will almost always get us above the moving average. Above the moving average now, you can trap in those buyers trying to get long, and you can sell right into those stop losses. Where's my objective at that point, right? We're selling off the highs of that channel, traps, failures, pullbacks, all the stuff you guys learn in that free trading class I mentioned earlier. Where's our objective? Our objective next is that range down there at 40.22. I have a couple more breakout patterns I want to talk about here going lower, right, on the S&P, but let's make the move over to the Nasdaq now, because the Nasdaq is very similar to the S&P as well. Everything we talk about the Nasdaq will also apply to the S&P and vice versa. I want to talk about how to trade that reversal, right, going higher here on the Nasdaq and that breakout going lower here. Let's keep going over to the Nasdaq here now. The Nasdaq is very, very similar here to the E-mini. There are three basic factors here right now on the Nasdaq. One is the strength of that move lower. Anytime we see a strong move in one direction, we expect they want to retest the low. Once they retest the low, now all bets are off. Do the bears struggle and pop back up? Or do the bears push through with a breakout going lower to our next big snapback target? Remember that snapback target? The S&P got theirs today. Will the Nasdaq get theirs tomorrow? We'll find out. This is that snapback we talked about in last night's video newsletter. In a nutshell, the snapback target happens whenever Monday is a holiday. Markets love to go back to basically the last full trading day of the prior week, which is last Thursday evening. That is basically last Thursday's high at 12,342. That's where the bears want to get to if they can break through that low here. That's the first item on our list. Second thing is this trading range, that bullish pop into that trading range. It's very, very important because if these bears, if they can't hold this, it's going to want to snap right back up, right? That kind of slingshot back higher. And again, that last week's close is right in the middle of that trading range. It's almost perfect, right, for that reversal. And of course, the bulls would love to grab this thing really back up to those big highs up there if they could, right? That 12,883. Again, same thing here on the S&P as well. And then the much more obvious factor on the Nasdaq is we're definitely sitting right at yesterday's low. Again, if you watch last night's video, you know why this is important, right? That strong move down, that was the reason why we were anticipating that 1-2 short off of that high. They took out that low. As we always say, mission accomplished. The bears get the mission accomplished now, and we bounce with that 2-try failure off of that low. This is obviously a major area of support down here, and you've got range magnet overhead. So again, that's a very big factor on this. Much easier to see in the Nasdaq, obviously, than we can talk about obviously on the S&P. The S&P is a little more sneaky about where that level is, as we mentioned earlier. A lot of this is going to be pretty similar here on the Nasdaq than the S&P. As we go lower, as we go lower, bears need to take traps going lower, right? They must rely on traps here to sell as high as they can. As we go lower here, exactly where the fun starts, that 1, that 2. Again, look over here, right? That's exactly what happened here. We take the low out, the bears once, the bears twice. We're buying now into those stop losses. Same thing over here. We can look for that 2-try failure. Once those bears are locked in, we can run those stops, use those stops as fuel, and then as we go higher now, find that new channel. And what we would say, right, buy that first test. And again, I say buy the first test, right? We're gonna drill down to a faster time frame tomorrow. This is a 4,000 tick chart. This is not the entry time frame that we'll use on this. That could be a trap setup. It could be a failure setup. It could be a pullback combo. You'll see a lot of examples of that. In fact, I have probably 100 examples of that inside that free trading class that I mentioned in the upper right-hand corner, if I haven't convinced you to take that class already. So we also know as we go lower, right, that breakout going down. All right, a little bit of a recap there on the Nasdaq. Now, let's talk about some new stuff here as we go. First of all, if the market breaks down, we talked about that 1, 2, 3 breakout pattern, right? We talked about if they take that low out and they can hold that pullback and jump off that moving average. Remember, again, doesn't matter how strong that first leg is. Okay, we got to see him hold it and blast, then find that new channel nice and tight off that low, off that high, find those traps, find those failures, right? And we want that first test off of that low. 12,342, 12,340 area is that next objective, the snapback target. I would also like, one of my favorite breakouts is a pop and grind. You got to learn this setup. This is a must-know setup in today's markets. Pop and grind. It'll take out that low. And then instead of pulling back and blasting, what it will do is it will start to grind lower. Okay, I call this the pop and grind because usually pops and grinds lower. That grind lower is one of the biggest clues you'll get as a price action trader. What we want to do now is draw that trend line off those lows, draw it right up around that high, and then again, look left. Think about where some prior swings are. Get above those prior swings. That's usually where the best entries are. Find those failures and back down again. If you want a good example of that, look right there. That's exactly what that happened here. Obviously in a slower time frame here, they pop down, they grind it down. We draw that trend line off that high, mark that trap, right? I mean, I'm not making this stuff up, guys. These things happen over and over and over again. And we talked about that short last night, 24 hours ago on this video. I get a bunch of emails this afternoon from you guys who nailed that short, right? Late morning to morning, late morning here this morning. So definitely congratulations on that, on that trading going lower here today. That is a great, again, option here as we go. This will also apply to the S&P as well. That pop and that grind, right? Pop and grind, mark that low, mark that high, find those traps and grab, right, and grab those traps. One thing to keep in mind too on kind of the pop and grind is that oftentimes the pop leg is equal to that follow-up leg, right? So the pop leg is equal to the follow-up leg. Okay, we always say in our trade room, the first leg and the third leg. Make sense? Right? So the pop leg goes lower, and then usually that pop leg is about equal to the follow-up leg, right? That's the first leg, the third leg, that's your middle second leg right there. Hopefully that makes sense, right? That'll give you a better idea of where this thing actually wants to go if we get that pop and grind. We have a general idea of where it wants to go, but that pop and grind, first leg, third leg, will do a pretty good job at giving you a very good accurate target as you go lower for the bears. Now, how do we buy this thing as we go higher? We haven't talked about that yet, have we? How do we buy this thing as we go? Well, again, it's very important to remember the strength of that move down suggests that as we go higher here, you're going to probably see some bears come in and try to sell it back down again. The way you want to trade this as a buyer is to trade it right against them, let them get short, and then look for that long, again, to use their stops as fuel. We know this range has potential to slingshot going higher, so as we go higher here, look for the 1, look for the 2, and what you really want to think about right here, in this area, I can't be that aggressive yet because, again, we don't have that momentum on our side here. So what I call a 2-try failure here, bears once, bears twice. If we really get lucky, there'll be a trend line off that high, off that low. That is a money trade. Right below that range, again, a lot of bearishness overall, so you really got to kind of give them the benefit of the doubt, respect those bears. But once you start seeing those bears try a couple times there now, you know exactly where their pain is, right? You know exactly where all their exits are. It's right above those highs here right now. If I can get that trap or a long off the bottom of that little hidden channel, man, I love those reversals when you're going back up into that trading range. That's a great way to buy this thing as the sellers start to struggle going lower here. And then, boy, if we can rip higher here, we literally have the pick of the litter, as they say, right? We can pretty much take anything we want now going higher, because now if they can start getting this momentum to run here, there's no easy way to sell this, right? Because now you've got this big range. And again, guys, keep in mind, this all applies to the S&P as well. But if we start ripping higher here right now, I mean, you got to think there's a big bullseye right on that 12,825 here on the Nasdaq, on the S&P. On the S&P, you got to think that big bullseye easily, right? Easily up here at that 4160. Last week's close might as well be just a bullseye for those buyers for tomorrow. So again, on the S&P, right, we go lower, bears once, bears twice, grab that little hidden channel, right? Little trap below that low. Love that setup. Okay, back to the Nasdaq though here, before I lose you here this evening. Okay, now we got the failure. That's right. That's a good one. Now, as we go lower, do we pop up? Do we hold the pullback? and jump off the moving average. What do we call those? In this case, 1, 2, 3 breakout, 1, 2, 3 reversal, 1, 2, 3 move, find that new high, find that channel low, drill down to find your traps, get underneath those prior swings, get underneath the moving average, get that trap, get that failure, hit those stops and punch it going higher. Another good example of where the first leg and the third leg are oftentimes symmetrical. This one's pretty easy though, because we know exactly where the buyers want to go. They want to take out those highs up there, like I mentioned before. That's a great trade to get long on. Another one would be a pop and grind. This is the definition. If you were to look up when to trade a pop and grind channel, it would give you exactly this, right? Because if the bears fail to retest this low right now, it could easily snap, short squeeze, right? Take out all those buyers who got in, and this is exactly where it pops. It starts to grind. That grind is nothing more than the sellers getting out of their positions. That's all that is, right? Those are not buyers buying it higher. Buyers want to buy low. Those are sellers getting run over and getting themselves out of the way. Once it starts to pop and grind like that, you know what we do. We find that high. We find that low, we drill down, find those traps, those failures, right? And again, first leg, third leg, usually very symmetrical. We know where the market wants to go, at least up to that 12,825 area. If not, all the way back to that 12,883, which of course is that, right? Is that Memorial Day holiday highs there as we go. I've got one more breakout going higher, I think is very likely as well, and that is a 2-try trap. Again, on the idea that we may slingshot going higher here, if we do end up seeing this thing really rip and run higher here. Now watch that strong move, that shallow pullback, and that higher high in price. Okay, repeat it after me. Strong move gets the momentum going. The shallow pullback drives all the Fibonacci pullback traders. Right? Nobody can get in. That drives FOMO. And then once we get that higher high, that confirms it's not a V-top. Right? Is basically what it does. Right? So we want to see a strong move, shallow pullback, that higher high in price to confirm, and traps, baby. One of my favorite trades in a strong move. We don't trade the pullback, we trade that little trap, right? Because it goes so far, so fast that everybody wants to buy as low as they can. That's the reason why that setup works so well. The one thing about this one, though, is keep in mind, the one about this one is you would want to get into this trap setup before we take out some of these highs. Right? Because obviously that's when the move will usually start to come to an end. Buyers will take their profit up there. Now, what do you think? Is it possible that we may get that thing? Remember we talked earlier, that 2-try failure back up? What do you think? Is it possible here we get that 1, 2, 3, or whichever one of these reversals that we get, we run all the way back to that high, and then what do you think? Is it possible now the buyers try once, the buyers try twice, all their stops now are sitting right below that low, we're at major resistance with ranges below us. What do you think? Can I use that short to sell off that high? I definitely can. Remember though, we don't pick tops and bottoms. We let the other side of the market show signs of exhaustion, right? That's the key. We're at a major turning point up here. That's great. But now, remember, that momentum is really strong up there right now. So don't force that short. Let those buyers wrap that rope around their neck. That will tell you exactly where their pain is. And of course, at that point now, we look for those signal candles, drop it down in with that failure, find that new channel, right? Find that new channel and hit that short off the high of that channel. This is the same sequence I talked about down here. Take out that low, 1, 2, back up, find that new channel, and get it going back up in the opposite direction, right? That little dance that it plays there repeats over and over and over again. Just remember though, we don't predict tops and bottoms. We find major turning points. We wait for signs of exhaustion, and we use the opposite side's exits as fuel to get a quick first target, get rid of that risk, and then hold the runner for the bigger move of the day. All right, NASDAQ, we're looking pretty good. S&P looking pretty good. How you liking this video so far, by the way? Let me know in the comments section. If you're still watching this video right now, I would love to know what you like, what you don't like. I would love to know how I can make this video better or what you need the most amount of help with. Do me a favor while you're down there. Hit that like button. Make sure you subscribe to the channel. And again, let me know, because if you're still watching this video right now, you are the person I work hard for on these videos every evening. I want to know what you like, what you dislike, and of course, how I can make this video more valuable for you. All right, how about some oil here tonight? 3 basic factors on the crude oil here right now. 1, bears. They still have that big move down. Right? That big move from yesterday is still trying to retest. Okay, that's one big factor. And we talked about this yesterday, right? Last night. Strong move down, right? We still haven't retested that low yet. And so we already know this already now, right? If we test that low, can we get that reversal going back higher? Do we get a breakout going lower? Right? Keep that on your radar for the oil. Second thing here right now is the range above us. Okay, just like on the E-minis, we popped up into a trading range. Now, why is that important for us right now? It's important for us because if these areas of support down here hold the way they look like they will, again, big variable tomorrow is the OPEC meeting tomorrow morning. But if this thing holds, this could easily snap right back up, get that nice slingshot, that nice short squeeze, running back higher. I love that part of these charts here tonight. And then, of course, the third part of this is the OPEC meeting, right? That makes my job tonight difficult because it's one big grenade that might go off tomorrow, 7:30, 7:45, and again, they regularly leak that data out early, so we might hear about that earlier than 7:30, 7:45 Eastern time tomorrow as well. They oftentimes do leak out those announcements, so definitely keep an eye on your newsfeed tomorrow as well. That is a big variable. It's a huge question mark. It could easily blow up this entire chart, and it's just part of the game, unfortunately. Sometimes you got big news on your radar. You do your best to plan your trades. You take whatever the market gives you, and we may have to make some updates tomorrow morning as we open up our trade room. So a lot of this now should start to come together here for you as we go over this here right now, right? We know what our 3 aspects are as we go lower, right? Now here's one big difference. On the S&P and the NASDAQ, I like that short off these channels, right? I like that short on the S&P and the NASDAQ. I don't like it as much on the oil, and a lot of that is because we're right at multiple areas of support right now. So I don't like that short as much. The oil market, and again, a lot of this can change very quickly here because of that big news tomorrow morning. There aren't as many good short trades on the crude oil than there are on the NASDAQ and the S&P. That's why I don't have that channel drawn on here right now. But it's very difficult to justify that trap here because again, we're pretty much right on that low right now. It's a dangerous short. I would much rather grab that trap short on the S&P or the NASDAQ. I don't love that one as much. What I do like, obviously, though, is as we go down to that low here now, we complete the mission. Big bear move down. Bears want to retest a low. We complete that mission accomplished. Now we wait for those bears to dig their own grave, right? Now we let them try once. We let them try twice. We know where all those stops are, and now we can hit them right where it hurts. Between you and me, I always like to grab a trend line off of that low or a trap off of that low. There's some more advanced tactics on that setup. But the bare minimum, though, is the bears want to try twice here. Because again, we're so bearish overall right now. I don't care if I'm at a level of support. I gotta wait for signs of exhaustion. Once those bears exhaust, now we know where their pain is. And now we can go out and we can buy that signal candle, buy that failure as we go higher. And remember, and this is where the good stuff now happens, right? This is where the fun begins now, because now this momentum wants to shift and run pretty much back to retest that 117.86 high. I would imagine if they can get that reversal off that low, it is a lot more potential than 117.86. But for right now, though, mark that high, mark that low, grab that trap. Yeah, baby. I love that setup. We tell all of our students at Trade Room, if you can't grab the reversal, sometimes you don't get the reversal or you're not confident to take the reversal. If you don't grab the reversal, your job, right? Like Steph Curry getting the ball on the 3-point line, your job is to hit that trade. That's a very good trade as it turns coming off of that low. Now, I would also keep in mind too, this whole setup, really for the most part, you've got the measured move down here, right? That's a breakout leg. Anytime we see a range, the breakout leg is the measuring leg. So you'll notice there's a lot of support down here as well. I got that big low from the, basically what was that last Friday's low there as well. So it wouldn't surprise me at all if this thing takes out some of these areas here. We get that 1, 2, and then right back up again. So be very careful as we go lower here on the oil. Now, again, we have the OPEC report tomorrow. So what would a breakout look like? A breakout has to be pretty convincing. So it has to take out that low. It has to hold that pullback and really blast, right? That blast is the momentum that we need to now mark off that low, mark off that high. And this is where I always tell our students, if you have enough momentum, you can almost always get at least a little bit of profit out of that trade, right? So we know where that short is. I do understand there's support down here, but if you can get enough momentum with that 1-2 blast off that moving average, it may not go forever, but you can almost always get at least a retest of that low. So I still do like that trap or that failure or that pullback combo off the high of that channel. But again, remember, we're not taking the first one. Right? The first one is off limits. Again, it doesn't matter how strong that move down is. Once they try, once, twice, right? Then we can, right? Then we go back up. If they hold it, then we get the breakout, right? So if they hold that breakout, now we hit the next one as we go. All right, so keep an eye on that. Obviously, too, a pop and grind could happen tomorrow. OPEC fueled pop and grind, pop down, grind, right? OPEC could easily do that to us here tomorrow morning. Mark off that low, mark off that big high, drill it down, get those traps, right? Remember, too, pop and grind, first leg, third leg as we go. The next big kind of round number here is 110. There's a range right around 110, 110.75 up there. So definitely keep that on your radar tomorrow if the blood really hits the streets tomorrow on this oil report tomorrow. I would be surprised if we saw a 2-try breakout. Strong move, shallow pullback. Maybe that doesn't seem like it doesn't seem like, and this goes for the S&P and the Nasdaq too, it doesn't seem as likely. I still love the setup, but again, it doesn't seem as likely here. It seems more likely to go out and get a 1, 2, 3 move or a pop and grind move. A 2-try breakout would be a little more, it would require a very, very big breakdown here as we go. All right, so that's how we trade this as it goes lower. Again, I would be very careful trying to trade into a breakout going lower right now unless we see a lot of proof with those 3 breakout patterns I just mentioned. The one that really makes me excited though is now getting that one lower, 1, 2, and then back up right as we go. So let's talk about that again. Now we know we have the potential to slingshot and run higher. So 1, pop up, 2, pull back off that moving average, jump back up. Where does the market want to go at that point? It wants to take out that high right there, right? Easy objective at that point. So find that new channel, drill down, right? Drill down and grab that first test, ideally before we get back to that high. Now, again, if we see something like this where it pops and really pushes like that, it's really, really strong. Again, even if it's at that high right here, I doubt it'll fail. I'll bet you'll be able to still make some money off that first pullback because, again, you've got that whole slingshot move here now with that big range waiting back above here. I like that 1, 2, 3 reversal going higher here. I love that pop and grind, right? Going higher, pop and grind, always one of my favorites. find that channel by drawing tight off of those highs. And then, of course, we're grabbing that trap below that low. I say traps because those are my favorite. You guys will learn more about that in that free trading course. A lot more common, though, is a failure setup, getting pinched below that moving average. And again, we have a good idea now of where the market now wants to go. There's a big range up there from earlier on in the week. 119, 120 would be probably the pie in the sky target for those bulls, but definitely 119 could easily happen tomorrow, especially if OPEC, again, the big variable for tomorrow, especially if OPEC comes out and says, hell no, we're not pumping more oil. You guys can suffer through these higher prices. They may say something like that. Probably not, right? Probably not. We'll see. We'll see. Again, that's a variable we don't have control over tomorrow. Be ready for that here as we go. I really like, again, if we go strong move up, shallow pullback, higher high in price, that trap is definitely worth taking on that one. Again, remember, it's not so much a strong move. It's a strong move, a shallow pullback, the higher high in price. That trap is a great setup as you rotate going higher here. All right, guys, I think I've covered most of it here for tomorrow. Don't forget, again, the big news on OPEC for tomorrow. It may create a little bit of a sluggishness overnight. Remember, markets or trading is like riding a bicycle. It's always easier when it's moving. And speaking of easier, I'll tell you what's a whole lot easier. Coming out and trading with us every day in the trade room. We have a great trade room, a great group of traders, great video course. If you're looking for a great place to learn and trade along, we have a trade room every morning, 8 o'clock Eastern time. We prep our charts. We trade together. It's a fantastic experience. It's the easiest way to either kickstart your trading career or to get your trading career back on track. I'll put all the free course links, all the membership links, everything you need will be in the description of this YouTube video. Hopefully I'll see you there tomorrow, 8 o'clock Eastern time. If not, we'll come back and do it again tomorrow night. Same time, same place. Big day coming tomorrow. The game plan's ready. Now all we need is a few hours here overnight to see what Mr. Market gives us going to Thursday's trading session. Watch those news times. I'll see you tomorrow morning, either in the morning session with the trade room or same time, same place tomorrow night. As always, my name is Joseph. Thanks for tuning in. I appreciate you guys every evening on this video. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.